What is a 1031 exchange and how can you harness its power? As realtors, we've helped many of our investor clients use the 1031 exchange tool to buy and sell rental property. We are not licensed tax attorneys or CPAs, so we always recommend you discuss the details of your particular situation with your professional advisors. The IRS Code Section 1031 offers a powerful way for owners of investment properties to defer taxes on capital gains by purchasing other income-producing real estate and thereby building their wealth. So here's an example of the most common use of this wealth-building tool. Let's say Susie and Joe taxpayer bought a condo in 2006 for $400,000. Now, they lived in the condo until 2010 when they bought a single-family residence, and then they began leasing the condo. The real estate market had declined a little bit during those years, so the condo had a market value of just $350,000 when it was first rented. But over the next 10 years, the condo appreciated in value to $575,000. So Susie and Joe decided they want to sell that condo. They consulted with their CPA in 2021 and discovered if they sold the condo and did not buy any replacement property, they would have to pay over $100,000 of the net proceeds as capital gains taxes. So to avoid paying those taxes, which can amount to almost 38%, Susie and Joe elected to take advantage of the 1031 exchange. After the condo sale closed, their funds were transferred to an exchange accommodator. And that's a third party who's going to administer the funds, and they're going to make sure that the requirements of the exchange are all followed. The rules of Section 1031 allow the investor to purchase more income-producing real estate equal to 2 times the amount of the departure property. Susie and Joe can buy up to $1,150,000 worth of additional property. It also allows the investor to purchase 3 replacement properties. So Susie and Joe decided they were going to buy a duplex in Ontario, a condo in Corona, and a single-family residence in Riverside. They now have 4 income streams instead of just 1. Those replacement properties must be identified by giving written notification to the exchange accommodator within 45 days after the close of the departure property. And the replacement property sales must close within 180 days after the closed sale of the condo, or by the date Susie and Joe's next tax return is due. This is just a quick look at the powerful ways a 1031 tax-deferred exchange can be a tool to help you build your wealth and your income. So for more details, click the link in the description below. And you can also find a lot of information on irs.gov. As always, we recommend you consult your legal or tax professional for advice about your particular situation.